Yo, what's going on, everyone? It's Chase. We got an action-packed video today. We're going to be doing an options crash course. We'll talk Bitcoin, we'll talk Ethereum, we'll talk a couple of stocks just to relay to the crypto market. As usual, big shout out to Prime XBT for sponsoring these videos. Check them out. My links are at the bottom. Nothing in these videos are financial advice. Find your own financial advisor, etc. All right, let's get right into it. So, we've been in a downtrend on Bitcoin. Basically overall markets in general have been in a downtrend. Saw some euphoria on the timeline today. You know how it goes. Nothing has changed. We're still in a major downtrend here. We can see that we're in the bearish part of the chart, right? Every time we're below this red line, basically, it's been a down move. We get below the red line, it's a down move. We get below the red line. Hey, maybe we get something like this. Maybe we get a push into here, and I would think we continue the down move at that point. If we can flip something, if we could flip this whole area to support, something like that, that would be an interesting change, a development, and I would be open to potentially, ranging maybe perhaps in something like this area. So that's very possible, but it's not something, it's only very possible if we clear this level, right? Until we clear this level, I'm still, I'm not going to say fully bearish, but I'm not expecting any type of major rally whatsoever from cryptos. I'm just going to continue to play the downtrend, and I'm waiting for an optimal short scenario to present itself. Now, with that optimal short scenario, hold on. When we're talking about an optimal short scenario, we got to remember that these markets are moving very uniform, right? I did a tweet about it yesterday. Move over and look at SPY here, also known as SPX, SP500, ES, whatever you want to call it. They're all basically just the same, tracking the same price movement. SPY is just the ETF version. So if SPY can rally into, say, 456 to 458, we may see another pop in Bitcoin, may see another pop in ETH. At that point, that is where I'll be looking for short position, somewhere around 40 to 41 on BTC. And ETH here, we could see this 26 EMA has been sort of the kiss of death every time it touches it. We got a nice little fib, confluence here, the 705, the OTE, the Mr. ICT, whatever you want to say. But some good confluence overall here, and you can see this low here as well if you shift the line a bit, and then you have all this confluence between OTE, 26 EMA, just mostly general price action stuff, and you throw in you throw in one indicator, you throw in a fib, and for me that's enough confluence. That's 3 points of confluence right there, and you can go back in the chart and you can see the confluence at the level, resistance all over the place here, support here, you get a little chop and some deviation here, but you could see before the breakout it served as resistance, it breaks through, moves up, support here, and I would expect resistance here, confluent with the resistance on BTC, confluent with the resistance on SPY. Okay, so all that moves together, and like I said, these markets have been very much moving together, so I don't need to look at 100 charts right now. I literally have it narrowed down to like 5 alts that I'm looking at, Bitcoin, Ethereum, and a couple stocks, because pretty much everything's moving together. It's not it's not some type of this coin's parabolic right now, okay, we're rotating into this. It's mostly just everything's moving together when we're talking about high caps. Okay, so let's get into the options trading portion part of this. Now, I'm calling this a crash course because I'm not here to teach you the super in-depth stuff about options, like how to collect premium or how to, what, every single Greek means purely scientifically and numerically and stuff. When I played high school basketball, right, I was a really good dribbler, but I didn't always get the ball in the hoop. When it comes to trading, you don't, all this fancy shit, you don't necessarily need all this fancy shit just to get the ball in the hoop. Now, I'm not saying that stuff like that isn't good to learn in the future, but that's not my main focus. My main focus was really when I started options in 2019. it was because I wanted to play the COVID down move. And that was the beginning of it. And all I've ever done with options is I watched a couple YouTube videos, and everything else I learned through experience. And it's the same as my trading. And I've always learned with trading is that, I'll go with the simple support and resistance person over the person who's fucking on chain this and 100 indicators any day of the week. Because typically the SR person just knows how to get the ball in the net. They're not fucking dribbling this, doing that, doing all this crazy shit. They just get the ball in the hoop. And that's it. So that's what I'm going to teach you in regards to options today. We're going to try to get the ball in the hoop. It's as simple as that. Okay. So before we even get into it, I want to say that options are pretty, they can be extremely high risk. It depends what, we'll pull this up here. Now, and again, you don't need to be on this platform, okay? I know a lot of people are going to say, oh, what platform is that? Blah, blah, blah. It really doesn't matter. All you need to be able to see is you need to be able to see the delta, the theta, open interest volume, and that's really it, okay? You don't need a ton more. And what you're going to see here is the options grid. Let's move to something. We'll use Tesla, I suppose. You'll see the options grid, and when we bring it down, you see the price of the options. You're always bidding, okay? Like I said, we're not selling options here. We're only bidding, and that doesn't mean that we're always bullish, because when you bid a call, this is the call side. When you're bidding calls, that means you think it's going to go up. When you're bidding puts, that means you think it's going to go down, okay? We're not doing selling options whatsoever. We're just doing buying options. But you can still be bullish and you could still be bearish, okay? And yeah, as usual, I didn't go over any of this shit ahead of time. You guys know I'm sort of off the cuff. So if I'm a little scattered, forgive me. But I'm going to try to give it to you the best as I can. Okay, so the most important things to know are the theta and the delta. The theta is how much time, it's time decay is what theta means. And every single day, it's going to lose this value right here. This is the price of the option, okay? Now it says $21, but it's not actually $21, okay? It's actually $2,100, okay? Because it's representing 100 shares. So don't think of it as 21, and don't think of it as 76 cents, right? This is actually going to be $76, okay? So that's one thing to keep in mind right off the bat, because it's confusing for a lot of people. It's representing 100 shares. So you take this price times 100 essentially, and there you go. Okay, so that also means that, let's take a look at the theta here, 3.54. That means you're losing $354 on this contract every day. Now, why are you losing so much on these contracts? Well, it's because they're short dated, okay? Short dated are extremely high risk, extremely high reward. Okay, short dated contracts, and when you start going out further, the contracts are actually going to be a lot more expensive, but you're going to see that the time decay is much less, the theta is much less, okay? Now let's talk about the delta. The delta is how much the options contract is going to move every time that the underlying price moves $1. So Tesla's at 931 right now. If it goes 931.25, if it goes up to 932.25, this contract right here that I'm hovering over that has a delta of 0.53, this option contract is going to increase by 0.53. Okay, so you're going to put that on the end there, and it's now going to be worth 24.03, which is actually, $2,403. Okay. All right, so now that we got sort of and make sure you know anything that you're trading, you want to see some open interest, you want to see some volume on it. Any of these coins that you'll see on my list here, ignoring the reference, but SPY as well. Any of these coins, I say coins, any of these stocks typically have a good amount of volume and whatnot, and these are the ones I watch. Mainly I watch SPY, Apple, Tesla, Nvidia, AMD. They're all moving pretty similar lately. And also for a beginner, if you're a beginner, if you have a low amount of funds and you're trying options, stick with stocks that are cheap, because you're not going to be able to afford trading Tesla options unless they're extremely short dated because they're cheaper. But you're going to want like AMD, you're going to want DraftKings, You're going to want maybe Robinhood. You're going to want cheap stocks, okay? Because when they get really expensive, the options contracts also get more expensive, okay? So what does this all mean, and how do we fucking translate it to a trade? That's really what's the most important thing here. Let's go to Tesla. I talked about this one the other day. Now, this, I believe, was on a Friday. Let's see. January 28th. Yeah, okay. So this was Friday. This was a down move, right? And was this on the open? I believe it was on the open. I think I slept through this. Yeah, 9:30 right on the open. Okay, so when talking about short dated, I'm going to talk about a couple different types of options trades that you could take. The first one we're going to talk about is the extremely risky but extremely high reward short dated option, okay? If this does not go in your favor very quickly, it's going to go to zero, okay? By the end of the day, this contract was worth zero. At its peak, it was worth about, now here's the problem. I can't go back in time because the platform doesn't show what the contract was worth. Now it's gone, right? It's gone off the chain. It doesn't show previous dates. So, but if I remember correctly, and I had a tweet about it, I think it was up maybe 14x or something, just off this little move right here. This was it. From here to here, you got about a 14x on this move. And so what was the play, though? Well, the play was first this. Before you do anything in options, you have to think, okay, what am I really doing here? An option is simply just a trade with a time constraint put around it, okay? So if we look here, we see, first thing we want to do is we want to find a clean level. We got support, we had resistance, and then we had this consolidation before the up move, okay? So to me, that was a pretty obvious level right there. And I would be bidding this level. Now, I slept through it because I'm a fucking degenerate and I prefer to sleep rather than make money sometimes. It is what it is. It's a downfall and a flaw that I have. Anyway, price came down on the open. You bought the option right here. What are you doing, though? What are you bidding? You have to bid the strike. This is the strike price in the middle here. You see all these prices. So you want to bid the first, basically, the first, what's it called? First trouble area. I'm not sure that's like a cred term. He sort of introduced that. You want to bid the first resistance, or you want to have a strike of the first resistance that the price is going to get to, right? So you could have just marked this out, and you could have said, okay, I'm going to play, and this was from the daily, right? And now we even refine it more, and we see, okay, well, there was obviously some support here. So now this is going to be our resistance level, basically. So you were going to play about an 860 strike, okay? So we would go to the 860 column on the weeklies. Now, these are heavily in the money now, but at the time, these were out of the money, okay? When they're out of the money, they're going to be cheaper. The delta is going to be lower, but as the delta, or as you get closer to the strike price, the delta actually gains over time until it gets towards 1. And this is actually determined by the gamma. I don't have that showing, but just know that as price gets closer and closer to the strike price, your delta is going to increase until you're finally at a 1 delta, which is, basically fully in the money. Okay, so the morning comes, right, and you're playing this extremely risky 0 day. They call it a 0 day, a weekly, but this was a 0 day because it was on a Friday, the same day of the expiry, same day expiry. Okay, and we're going to play an 860 strike, and we're going to buy that call. We buy it at the open, it pops. One thing you need to know about options is you close them on volatility. Don't sit, okay? Especially on a 0 day, especially on a same day expiry, especially on short dated contracts. If you get in here, right, you get in right here and you think the price is going to pop and it does this, you fucking close, okay? if it does this, right? If it consolidates and it makes a little bit of a higher high towards the end of the day, you're actually gonna be losing money. You're not gonna gain more money just because the price went up. Close on volatility, okay? Don't close on consolidation. This was a mistake I first made with COVID when price was going down like crazy and I was up something like 15x or something, and I was like, oh, but this is gonna make another low, and it literally did something like this, and it was like a 14x here and it was like a 6x here. You lose a ton when volatility disappears. Okay, so always close on the impulse. So this short dated contract, you would have immediately closed. You'd be down on like the 5 or the 1 or anything. I would have literally closed it here. Okay, right on that pop. And I'm sure if for a bit here, it probably was valued at a bit more. But immediately once it did this, and started to break down, it lost value extremely quickly. Okay, so just take the volatility, take the pop, and close. Okay, so that's a short dated contract, and I think you should be getting the gist now that this is just trading with a time constraint. I think the video or the options segment started off a bit scattered, but I think we're starting to wrap it. We're starting to group everything together here, and it's starting to make sense. Okay, so now we can talk about a different type of options trade, which is where, you just think, okay, let's take a Roku, right? Because I was in this one, I bailed on it. I don't know, it might still be decent, but I saw this level and I was like, okay, this is previous resistance. It's gonna eventually flip to support. Where do I see it? How long do I see it going? And what you can do is you can literally take your marker and you can just draw a squiggly. I had it coming down and I was like, okay, it probably does this, probably does a little fake out. Okay, and there's my time. And April. Okay, so April, and then I add a month because you don't want to get too close to the expiry because then you start to get extreme time decay and your position gets wrecked, right? So you would say April, let's add 30 days. Okay, let's go to our options. We want Roku here. We type in Roku. We wanted April, or we expect the move to be by April, so what we actually want is May, and we're going to look for some type of a contract in May, March, April, May, boom. Okay, we go into the options chain. What do we think? We think that price is going to get back towards this 200 level. Okay, so we want 200 strike in May is what we want. We want 200 strike May. So we go in here, we see May, we go to 200 strike, we're on the call side. And there's your 200 strike for May. It's going to be $1,435 per option. Every time Netflix goes up, or anytime Roku goes up $1, you're going to gain 0.39 on the contract. Gamma permitting, it's going to continue to go up, and you're only losing $11 per day off the theta. Okay, so that's a different type of trade. Is you're playing a bit longer out. You're just a bit more dated. And you're giving yourself a little wiggle room. So these are trades that are more realistic when it comes to options. When you're talking stuff like this, these are very, this is like a crash in crypto where you're like, I'm looking for a big bounce. I'm spotting a major a major high time frame level, and I'm looking for a big bounce off of it immediately. And understand, if this did not bounce immediately, if this did this, if this came down and it did this until the end of the day, your option would go to zero extremely quickly. That's why they're very high risk reward when you're talking same day expiry, 0 day, weeklies. Very, very high risk, okay? So, but the thing is, you can bet a very small amount and you could be heavily rewarded. If you did weeklies on Netflix before this dump, where was this dump? Yeah, if you did weeklies before Netflix on this dump, you made about like 270 times your money or something. So you don't need to go crazy, right? You could have put 100 in and you could have came out with like almost 30K, something like that, just by closing it on the open the next day. All right. So when it comes to same day expiry, it comes to very short term stuff, be very cautious. use small amounts of risk, and you will learn and you will gain experience, and hey, you might even hit a lottery ticket, so to say. Okay, and the last type of thing we'll talk about is just like basically like scalping, right? If you were to scalp on short-term options, like say it's Friday and you want to scalp SPY or something, okay, you think that 456 is going to be resistance. Well, the only way for you to really make money off of scalping options is to play near the money, right? Because if you're too far out of the money, you don't have enough delta to get paid, okay? So you got to play right here, right in this sweet spot, right near the 1 delta. Optimally you would go into 1.0 delta if you want to scalp. Take the first 1.0 and you could scalp off that. So if you're thinking that 456 or 458 is going to be resistance, something like that, we'd go into here, we'd take 458 and we'd we'd be clicking the ask column, by the way. Hopefully I didn't fuck that up for anybody, because this is what the ask is. So you're buying here. You can see it says buy on the little right next to my mouse. It says buy. So sorry about that if that confused anyone. It's showing what the ask is, and for you to buy the ask, you need to be in the ask column. So you would click this. Okay, so that's your scalp right there, and you would scalp. Basically, you want to be in the money, and you want the delta to be close to, as high as possible. The higher the delta, the better if you're scalping. Wouldn't recommend scalping options probably to anybody. Start off with the other stuff first, and then you can venture into that type of stuff later as you gain more experience. Okay, so hopefully that was a decent crash course. I do think it was a little more scattered than usual in the beginning, and hopefully it came together for you guys. If you have any questions, you know the deal. Leave them in the comments, comment on Twitter. Likes and retweets, all that stuff, always appreciated. Thank you very much, and I'll catch you guys next week.